Welcome to Lesson 4 of Week 8. Today we focus on direct costs, which typically comprise the largest portion of your grant budget. Direct costs are those expenditures that can be identified specifically with your project rather than with your organization's general operations. Understanding the direct cost concept is essential for preparing accurate budgets, maintaining proper financial records, and ensuring compliance with federal cost principles. Direct costs fund the actual work you propose to accomplish. When you think about what your project needs to succeed, you are largely thinking about direct costs, the staff who will do the work, the supplies they will use, the travel they will conduct, and the equipment they will need. These resources flow directly into your project activities. This lesson will help you understand what qualifies as a direct cost, how to distinguish direct costs from indirect costs, and how to organize direct costs into standard budget categories. We will also explore common challenges and best practices for managing direct costs throughout your grant. Remember that regulatory specifics discussed were accurate as of November 2025. Verify current requirements at ecfr.gov. By the end of this lesson, you will be able to identify direct costs confidently and organize them appropriately in your grant budgets. Direct costs are those that can be identified specifically with a particular sponsored project, an instructional activity, or any other institutional activity, or that can be directly assigned to such activities relatively easily with a high degree of accuracy. This regulatory definition from 2 CFR 200.413 captures the essential idea. The defining characteristic of direct costs is a clear, traceable connection to your project work. When you incur a direct cost, you can point to it and explain exactly how it supports specific project activities. This traceability distinguishes direct costs from indirect costs, which support operations generally, but cannot be attributed to any single project. Common examples of direct costs include salaries for staff working on your project, supplies consumed in project activities, travel to conduct project work, equipment purchased for project purposes, and consultant services engaged for project tasks. In each case, the expenditure serves your specific project and can be documented as such. The key question for identifying direct costs is, can I trace this expense to specific project activities? If the answer is yes with a high degree of accuracy, you likely have a direct cost. If the expense benefits your organization's operations generally, and cannot reasonably be attributed to any single project, it is probably an indirect cost instead. Understanding the distinction between direct and indirect costs is fundamental to proper grant budgeting and compliance. While the concept seems straightforward, the dividing line can be complex in practice. Direct costs are traceable to a specific project with reasonable accuracy. When you hire a research assistant for your grant, their salary is a direct cost because you can clearly identify their work with your project. When you buy reagents for experiments described in your proposal, those supplies are direct costs because they serve specific project activities. Indirect costs support your organization's operations generally, but cannot reasonably be attributed to any single project. The electricity that powers your building serves all activities housed there. Human resources services support all employees regardless of funding source. These costs are real and necessary but cannot be traced to specific projects with accuracy. The dividing line between direct and indirect can be complex. Some costs might reasonably be classified either way depending on circumstances. Your organization should have clear policies establishing how different types of costs are categorized. These policies should be documented and applied consistently. Consistency is required across all projects and funding sources. You cannot classify similar costs as direct for one grant and indirect for another based on what is advantageous. Cost accounting standards require treating similar costs the same way across all activities. Inconsistency invites audit problems and suggests improper management. Federal grant budgets typically organize direct costs into standard categories. Understanding these categories helps you structure your budget properly and ensures you include all necessary costs. Personnel includes salaries and wages for staff working on your project. This is often the largest direct cost category. Include all employees who will contribute effort to the project. from principal investigators to administrative support. Fringe benefits are the employer's costs for employee benefits such as health insurance, retirement contributions, and payroll taxes. Fringe is calculated as a percentage of salary and listed separately. Your organization has an established fringe rate that should be used. Travel covers transportation, lodging, and meals for project-related travel, include both local travel and trips requiring overnight stays. Follow GSA rates for federal grants and include sufficient detail about trip purposes in your budget justification. Equipment includes items meeting your organization's equipment threshold, typically $5,000 or more with a useful life exceeding 1 year. Equipment purchases often require prior approval and have special tracking and disposition requirements. Supplies are consumables and items below the equipment threshold. This broad category includes office supplies, lab consumables, minor equipment, and other materials needed for project work. Contractual covers consultants, sub-awards to partner organizations, and other contracted services. This category has special requirements for documentation and sometimes requires prior approval. Personnel costs are typically the largest direct cost category and require careful attention to proper charging and documentation practices. Understanding effort-based charging is essential for compliance. Effort-based charging means you charge salary to the grant based on the percentage of work time devoted to project activities. If a researcher devotes 25% of their work time to your grant, 25% of their salary is charged to the grant. This seems straightforward but requires accurate tracking and documentation. Effort must be documented through certified records that provide reasonable assurance that salaries charged to grants are accurate. Many institutions use effort reporting systems where employees certify that their salary distribution reflects actual work performed. These certifications carry legal weight, so accuracy is important. Key personnel are usually named in your proposal with specific effort commitments. The principal investigator might commit 10% effort, a co-investigator might commit 15%. These commitments become part of your award terms, and significant changes typically require prior approval. Support staff may not be named individually in your proposal, but should have defined roles. Your budget might include a project coordinator at 50% effort or a research assistant at full time. The budget justification should explain what these positions will do and why their effort level is appropriate for the work described. Travel is a common direct cost category that requires clear justification and careful budgeting. Understanding expectations for travel helps you prepare compliant budgets and avoid audit problems. Every trip included in your budget should serve a specific project purpose. Attending a conference to present project findings, visiting partner sites for collaboration, conducting field work at research locations. These are legitimate project purposes. Trips should connect clearly to activities described in your proposal. Budget details should identify destinations, purposes, and estimated costs. Reviewers want to see where you plan to travel, why, and how much it will cost. A budget line for $20,000 in travel with no explanation raises questions. Identifying 4 domestic conference trips at $2,000 each and 2 site visits at $6,000 each demonstrates thoughtful planning. Rate compliance requires following applicable per diem and mileage rates. For federal grants, GSA rates generally apply. Your organization may have its own travel policy that also applies. Use the applicable rates in your budget calculations, and be prepared to follow these rates when actually traveling. Foreign travel often requires prior approval from the federal awarding agency. If your project involves international work, check your award terms and agency policies. Include foreign travel in your proposal and budget if you know it will be needed, and obtain any necessary approvals before booking trips. Supplies is a broad direct cost category encompassing consumables, materials, and items below the equipment threshold. Understanding what belongs in this category and how to budget appropriately strengthens your proposals. The supplies category includes consumables that get used up in project activities, materials that become part of project products, and minor equipment items that do not meet the equipment threshold. Lab supplies, office materials for the project, software licenses, and small equipment all typically fall into supplies. Project-specific use is essential for charging supplies as direct costs. You should be able to explain how supplies serve your project specifically. Generic office supplies used across your organization's activities should not be charged directly to a single grant. Supplies dedicated to project work are appropriately charged as direct costs. Budget for reasonable quantities that you will actually use during the project period. Overestimating supply needs inflates your budget and raises questions about your cost estimates. Underestimating creates problems when you run short. Base your estimates on realistic projections of project activities and associated material needs. Distinguish between project supplies and general office supplies in your thinking and documentation. If supplies serve your project specifically, charge them directly. If supplies serve your general operations, they should be covered by indirect costs, not charged directly to individual grants. Equipment is a special category of direct costs with specific requirements for justification, approval, and tracking. Understanding these requirements helps you handle equipment purchases properly. The equipment threshold, as of November 2025, is typically $5,000 per unit, with a useful life of more than 1 year. Items meeting both criteria are classified as equipment. Items below either threshold are supplies. Your organization may have a lower threshold that also applies. Always verify the current threshold at ecfr.gov before budgeting. Justification is required for equipment purchases. Your budget justification should explain why the equipment is necessary for project activities, why existing equipment cannot serve the purpose, and how the equipment will be used. Reviewers want assurance that equipment requests are genuinely needed, not wish list items. Prior approval from the federal awarding agency is often required before purchasing equipment. Check your award terms for specific requirements. If prior approval is needed, request it before committing funds. Purchasing equipment without required approval can result in disallowed costs. Tracking requirements apply to equipment purchased with grant funds. You must maintain an inventory showing acquisition date, cost, location, condition, and other required information. Equipment may need to be tagged with identification numbers. At grant closeout, equipment disposition rules determine what happens to items purchased with grant funds. Contractual costs encompass various arrangements where external parties receive grant funds to contribute to your project. Understanding the different types helps you structure these arrangements properly. Consultants are independent experts engaged for specific tasks. They provide specialized knowledge or skills not available among project staff. Consultant arrangements should include clear deliverables, reasonable rates, and documented selection processes. The budget justification should explain why consultants are needed and how their rates were determined to be reasonable. Subawards transfer a portion of your grant to partner organizations who perform substantive project work. Subawardees make independent decisions about how to accomplish their portion of the project. Subaward arrangements involve specific compliance requirements, including flow-down of federal terms and monitoring responsibilities. Contracts are procurement relationships where you obtain goods or services from vendors. The vendor delivers specified products or services. They do not make independent programmatic decisions. Contract arrangements follow procurement rules appropriate to the dollar amount involved. All contractual relationships require written agreements documenting the scope, deliverables, payment terms, and applicable requirements. For federal grants, these agreements must include required federal provisions. Maintain signed agreements and documentation of deliverable completion for all contractual arrangements. Beyond the major categories, several other types of direct costs commonly appear in grant budgets. Understanding these helps you include all necessary costs in your proposals. Participant support costs are direct costs for items such as stipends, travel allowances, and registration fees paid to or on behalf of participants in conferences, meetings, symposia, training projects, or workshops. These costs have special restrictions and typically cannot be used for other purposes without prior approval. Participant support is common in training and education grants. Publication costs cover fees for publishing project results in scholarly journals or other venues. Open access publication fees, page charges, and costs of preparing manuscripts may be allowable. Include reasonable estimates if you anticipate publishing project findings. Tuition remission is relevant when graduate students work on your project. If your institution has a policy of providing tuition support for graduate research assistants, that cost may be allowable as a direct charge to the grant. The specifics depend on your institution's policies and the funder's requirements. Other direct costs is a catch-all category for items that do not fit neatly elsewhere. This might include communication costs, participant incentives, specialized services, or other expenses specific to your project. Keep this category focused on genuinely project-specific costs. Do not use it to charge general organizational expenses. Effective budgeting of direct costs requires attention to detail, clear justification, and alignment with your proposed activities. Following these principles strengthens your proposals and prevents problems during project implementation. Detailed estimates based on actual rates, quantities, and prices demonstrate that you have thought carefully about resource needs. Use real salary rates rather than round numbers. Research actual supply costs rather than guessing. Obtain quotes for major purchases. Detailed estimates show reviewers that your budget reflects genuine planning rather than rough approximation. Justification should explain how each cost supports project activities. Your budget justification narrative walks reviewers through your costs, explaining what you need and why. Generic statements like supplies for the project do not satisfy this requirement. Specific explanations like laboratory reagents for the experiments described in AIM 2 demonstrate clear connections between costs and activities. Alignment between budget and proposal is essential. Your budget should tell the same story as your narrative. If you describe 5 staff positions, budget 5 positions. If you propose visiting 3 sites, include travel to 3 sites. Misalignment suggests hasty proposal development and raises questions about your planning. Completeness means including all costs necessary to accomplish the work. Under-budgeting creates implementation problems when you lack resources to complete proposed activities. Review your proposal carefully and ensure your budget includes everything needed to deliver what you promised. Proper tracking of direct costs throughout your project supports compliance, enables accurate reporting, and helps you manage resources effectively. Building good tracking practices from project start prevents problems later. Separate accounting ensures each grant's costs are tracked separately from other funding and activities. Your accounting system should assign expenses to specific grants with identifiable cost codes or account numbers. This separation enables accurate financial reporting and prevents improper charging of costs across grants. Timely recording means recording expenses promptly and accurately as they occur. Waiting to record expenses creates backlogs, increases error risk, and makes it harder to monitor spending. Establish workflows that capture expenses soon after they are incurred with accurate coding to the correct grant and cost category. Documentation provides the evidentiary trail auditors need to verify your expenses, maintain receipts, invoices, purchase orders, contracts, and other supporting materials. Organize documentation so you can locate support for any expense if questioned. Electronic systems can help manage documentation efficiently. Regular review of spending against budget helps you manage resources throughout the project. Monthly or quarterly budget to actual comparisons identify potential problems early. If you are underspending, you might need to accelerate activities. If you are overspending, you might need to adjust plans. Regular review enables proactive management rather than reactive scrambling. Managing direct costs throughout a project involves navigating common challenges. Understanding these issues helps you handle them properly when they arise. Cost transfers, moving costs from one grant to another, require clear justification, documenting why the transfer is appropriate. Legitimate reasons include correcting posting errors or reallocating shared costs more accurately. Transferring costs simply because one grant has available funds and another does not is improper. Cost transfers late in a project attract particular scrutiny. Budget revisions may be needed when your spending patterns differ from original plans. Minor variations within categories typically do not require approval. Significant changes, such as moving funds between major categories or substantially altering your approach, may require prior approval from the sponsor. Know your award terms regarding budget flexibility. Underspending raises questions about whether you are accomplishing proposed work. If you consistently spend less than budgeted, reviewers wonder whether you overestimated needs or are falling behind on activities. Be prepared to explain significant underspending and demonstrate that project objectives are still being met. Overspending beyond your award amount creates institutional liability. Your organization typically cannot spend more than was awarded without sponsor approval for additional funds. If you anticipate exceeding your budget, work with your grants office to request a supplement or revise your scope. Unapproved overspending may become your organization's responsibility. Following best practices for direct cost management strengthens your proposals, simplifies compliance, and enables successful project implementation. These practices should become routine aspects of your grant management. Plan thoroughly by developing detailed budgets that align with proposed activities. The time invested in careful budget planning pays dividends throughout the project. Accurate budgets enable realistic work plans, prevent resource shortfalls, and demonstrate competent project management to reviewers and sponsors. Charge appropriately by ensuring costs genuinely serve and are charged to the correct grant. Before incurring any significant cost, confirm it benefits the project you plan to charge. Before recording any expense, verify you are coding it to the correct account. Appropriate charging prevents compliance problems and maintains the integrity of your financial records. Document consistently by maintaining records that support all expenditures. Develop documentation habits that capture necessary information when transactions occur. Organize records so you can locate support materials when needed. Consistent documentation makes audits manageable and demonstrates responsible stewardship. Monitor actively by tracking spending and addressing variances promptly. Do not set your budget aside after award and only look at it during reports. Regular monitoring enables proactive management, early identification of problems, and informed decisions about resource allocation throughout your project. Let us summarize the key points from this lesson on direct costs. Direct costs are those that can be identified specifically with your project rather than with your organization's general operations. The defining characteristic is traceability. You can point to a direct cost and explain exactly how it supports specific project activities. Standard direct cost categories include personnel, fringe benefits, travel, equipment, supplies, contractual, and other direct costs. Each category has specific considerations for budgeting and documentation. Understanding these categories helps you organize your budget properly and ensure completeness. Effective direct cost management requires careful budgeting aligned with proposed activities, appropriate charging to the correct grants, thorough documentation of all expenditures, and active monitoring throughout the project. Building these practices into your routine grant management makes compliance straightforward and enables successful project implementation. In our next lesson, we explore indirect costs, also known as facilities and administrative costs, or F&A. We will understand what indirect costs are, why they matter, and how they differ from the direct costs we discussed today. Understanding the relationship between direct and indirect costs is essential for comprehensive grant budgeting. Practice exercise. Review your organization's direct cost categories. How do they compare to the standard categories discussed? Identify any organization-specific policies affecting how costs are categorized as direct versus indirect.